one of my favorite slides is actually, because I do have love for finance, is the financial dashboard. That's what I call it, okay? And I call it financial dashboard because in reality, that's really how you should treat your business. In fact, I got this idea when I was doing some work for a software company. The software company was about 100 million in revenues, and I was involved in the consulting and the distribution channel. And what I did was I basically developed their entire revenue model and their financial dashboard on a one-page spreadsheet. And to the point, I did it so effectively that it was like, for me personally, I used it as a tool where the CEO actually found out about it and wanted to see an example of it. So, but it's a little different because that's a spreadsheet. This is more from a visual perspective important for the investors. So one of the things that you're going to have in the financial dashboard, okay, is the sales forecast, okay? Now, I wrote about it in the book, Entrepreneur Myths, that pretty much when it comes to sales forecast, I literally throw them out the window. Because my whole thing is being a complexity scientist is that it's extremely difficult to predict the outcome. So how can you forecast to me what's going to happen in 3 years when I can't even predict what's going to happen tomorrow? But you have to show something, at least go through the mental exercise so that as an investor, I know you've gone through it. So one of the things that you want to do is, and I do this a little different than most people, okay, is that I'll have, like right here, okay, I will have a very nice looking spreadsheet type of graphic. I'll make it simple where it's divided like into 3 years, okay? And so the first thing I do is I kind of combine, I cheated. I actually got this idea from my Professor White at SMU 20-something years ago. He teaches a class, used to teach a class called Entrepreneurship 101. And what he did was he had a very simple, direct method of accounting for cash flow, because in startups, people say cash is king, but I always say if cash is king, cash flow is the queen. And so what I do is I combine the profit and loss with the cash flow in a very simple way, but at least gives me a good financial dashboard of the feel of the numbers. So for instance, if you have a widget X, you're trying to sell something and it's $10, and then what I'll do is I'll predict how many units I want to sell. Okay, so if it's $10 and I want to sell 1 million units, and then I know that it cost me $5, actually I do it differently. I just have the revenue, okay, and then I have the cost. Above it I'll put price somewhere, okay? So then I compute the gross margin. Okay, and then from there, or contribution margin, because if you're selling something for $10 and it costs $5, then your contribution margin is $5 too. And then what I'll do is I'll add the operating expenses, and I usually divide it into like 3 different functions. And I know you can do it in different ways. It really varies on the startup, but sometimes I'll just make it, for instance, into sales and marketing. A line item, and then the infrastructure and operations, and then also what I'll do is the development innovation line item. So I have 3 of them. So it's basically how I see it is you can divide the business into 3 components. One is concept to launch, which is the innovation, engineering, design. That's one aspect of the business. And then the other aspect of it is the business is the order to delivery, which is the infrastructure, the management, the operations, and all that. And then if necessary, converting raw materials to finished goods, which could be the manufacturing component as well. It would be. So what I do is I divide into those 3 elements. Now, before I used to do it, line item by line item, manage management, sales and marketing, technology, development, brand, yada, yada, yada. You should still do that, but not on this financial dashboard slide, because what you're trying to do is aggregate as much financial information as possible in a very simple way so that the investor and yourself can understand the numbers. And then at the end, what I do is, based on these, I use a direct method to develop a simple cash flow statement where I have the beginning cash plus cash added from the operations, and then also an investment, if there's an investment. Hopefully you're getting the $2-3 million from somebody after you see this. And then of course the ending balance. And so by having all that, and I'll send you a sample of that to show it to you, by having that all on one page, it enables me to portray to the investor what I think is the potential growth of this company. Now, sales forecasting is a tricky game, because in reality, if you do it too high, then the investor's just going to slash it. But then again, if you don't do it high enough, the investor may think, well, why is it so low? So I've been on both sides of the spectrum on that, and I could tell you horror stories about it, but I won't, where you're trying to decide, do I make it look like it's going to be $1 billion company, or do I just forget about the sales forecasting and focus on explaining the unit volume for the product? And then also what complicates matters is that if you're using a freemium model where you're offering the service for free, then you have to deal with the assumptions. And that's one of the key things, okay, that I actually, so you have a sales forecast, okay? And then what I do is I also, like I said, I have it in such a way where I truly understand the gross margin of my product, because I have it down here. I have the price, and then I have the unit, okay, in the spreadsheet. And then what I do is I compute the total revenues and the total cost of goods based on that. And then of course I have the gross margin after that, or contribution margin if you're talking about manufacturing. And then what I make sure is that I explain the cash flow, because as an investor I'm going to want to know, when are you going to run out of cash? Or how much money do you really need to go cash flow positive? Because from a lot of from an investor perspective, I want to know when you're going to go cash flow positive, because I'm going to estimate on your ability to go cash flow positive, how much money needs to be put in, and how much money you're going to need in the next stage. I mean, I literally could tell you, because I've seen about 5,000 presentations, I could literally quickly, just like I guess in Matrix, numbers flowing down, I could literally just go down your slide on financial numbers and tell you where you could possibly run out of cash and whether you have enough cash. Now, this is not a matter of like, oh wow, I'm a smart guy or anything like that. I've just seen a lot of it. I've seen startups where they use X amount of dollars to get to a certain point and then run out of cash. And I've funded enough of them where also the entrepreneurs do not account for some of the costs that could come into play. So one of the things I also look at in the financial dashboard is, do you have any reserves? And we'll talk about it in use of proceeds slide. So I look at these, but the most important thing I want to talk to you about is assumptions. Okay? And one of the things I've learned as an investor funding so many startups is that I actually look at your assumptions, financial assumptions, more than anything. Because of course you can't predict the future. Okay, if you're telling me you're going to be $1 billion company in 3 years, great, fantastic, I'm cheering for you to go all the way. But bottom line is, I want to know what the assumptions, the financial assumptions were for you to get there. So obviously one of the financial assumptions is, if you have a product or service, what's your price points? And if you want to hit $1 billion in sales in 3 years and you've got a product that you're going to only sell for $10, then we're going to have a problem, because your product better be global mainstream for 7 billion people to tap into relatively quickly. So that's one. The other one is the assumptions in cost. If you're trying to get a product in a retail shelf, and you assumed in your financial model, as an example, that you're going to get into a big retailer like Walmart, Target, or Best Buy, or grocery stores, and you don't have marketing development funds accounted to get in, I'm gonna probably guess that either you don't know the retail channel and the distribution channel, or you're married to someone that's related to running Walmart. So my point is that the financial assumptions are very important to me as an investor. So make sure that you're very clear about your financial assumptions in regards to price. And part of that price, the financial assumptions, is reflected in your product slide and also your marketing overview slide, because you're probably going to talk about that there too, what the price points are in the industry. But here you still want to summarize it. So the price is important, the assumption of, for instance, how quickly you need to ramp up the money. Okay, so one of the things I'm also going to look at is your spending rate. You know, how quickly are you deploying the money? Because how you do that kind of gives me an indication of your financial management skills. So that's another one. And of course, just the efficiency. Like for instance, if you tell me it's going to take you $500,000 to develop an application that I know other people can do for $250,000, then I'm going to wonder why it's going to take you $500,000. So be very crystal clear the kind of financial assumptions you put in there, and make it very simple and very visual. I know I have a lot of writing here, but when you see it, you'll see it's very clear, very distinct, very easily explained. You know, I show you the numbers on the years. I have it on a table here, but also what I do a little different than others is I also may include a graph, like a quick chart. Bar chart, for instance. I'll have the revenues, I'll have the costs, and I'll have the margin. And it'll be by year 1, year 2, year 3. And from an investor perspective, that's very easy to show. So I may have that too. And I may repeat the sales forecast in a bar chart on a use of proceeds slide too, just for repetitious reasons. So that's what you want to do, and we're all different. I mean, I'm a big believer from an investor perspective is make the financial assumptions simple for anyone to understand. Don't give me some rocket science numbers, okay? Because I can tell you this, every time I funded a company that was using rocket science finance numbers, they never ended up being good, okay? When entrepreneurs gave me their simple financial metrics and methodologies, then it was all good, you know. And to me, it's like, make it easy for the investor to understand your financial dashboard. You know, make it so easy that they know how much money, okay, you're going to generate in first year to 3 years, how much money it's going to take to get there. And of course, I want to see like your margin percentage increase. So if your gross margin is, let's say, 20%, next year it's 25%, and the third year is 30%, so it's increasing. Of course, that's good as an investor. Then you have to give me some assumptions why you're increasing your gross margin for whatever reason. Volume, of course, is one of them, and efficiency. So there's a lot to it, and if you don't understand numbers really well, of course, somebody on your team should. And if somebody on your team doesn't understand it, then you got to have somebody in your advisory team that should be able to dress it up for you. Like any other slide, it's got to be a self-sustaining slide. Make it look sexy, make it look exciting, make it look like you're the next billion-dollar startup almost overnight, okay? So now, once you have the financial dashboard, and I can tell you, the other thing that what I do next is I actually do a use of proceeds slide, and it's separate. I keep it separate because I've noticed a pattern from investors, including myself. I want to know your sales projections. I want to know what your contribution margin is. I want to know what your cash flow is, and all that, all in one slide. And by the way, if you don't have the tools to put it all in one slide once you see how I do it, then make it into 2 slides where you have the profit and loss on one slide, and you have the cash flow, and maybe you highlight where you go break even, and where you're, for instance, on your profit and loss, where your contributions margin increases. But if when you go into the use of proceeds, and I separate them because I've noticed the pattern. They want to, the investors, including myself, like I said, want to see the numbers, and then the next thing they're going to say is like, well, okay, how much do you need? And then you tell them.